Hello. So far, we have discussed about what is the annual report, what is its structure, and what are the components of the annual reports. We have seen where the information of business is there, the risk that the company face, and how can we research a little bit on the company's external news which may not be there in the annual reports. So just to get a clear perspective of what the company is, what are their operating markets, what are their operating risk, and in which scenarios we need to be looking at the performance of the company. Now, before we jump into the financial analysis and try to analyze the balance sheet and the profit and loss statement, it's worthwhile to have a look at the one more section of the annual report, which is called the selected financial data and management discussion and analysis. This two sections though need to be looked at together with the balance sheet. It's good to read them beforehand so that when you are doing the analysis, some of your things which might come in your mind immediately might be resolved by the earlier discussion, the knowledge that you have gained from the management perspective, and you are clear more on where you need to be focused for further research. Maybe there are issues which are not explained well by the management, and you may need to identify them in order to research better. So let's look at the sections first. The first section that you can see is on the selected financial data. Now, the selected financial data is only about the sales and market, the sales figures, the revenue figures, the profit, and also the EPS, the earning per share. Usually with this information is important for a very broad user. There is not much that the users can do. The only thing that you can identify is if the company's revenue has been growing in last 5 years, has the company's EPS, earning per share, or dividend has been growing in the last 5 years, then they can apply a very broad multiplier, which usually you will see the price earning ratio, to see what is the price they should be ready to pay in case the earning per share is so much, or what would be the cash, how much cash the company has been distributing out of their earnings. So if you look at Apple here, their last 5 years performance has been on a continuous growth, from 215 to 229 to 65, then 260 and 274. But the earnings have particularly been dropping in the compared to 2018, when you were making 265 billion dollars and the profit was 60 billion dollars. Now revenue in 2020 has grown to 274 b, but the net income has dropped to 57 billion dollars. There can be multiple reasons. There is no one answer to this because it's a very broad figure, so you cannot really draw any reasonable conclusions from it because it's very general. We need to look at deeper into the profit and loss statement for the last 2 year 3 years, and then we will be able to look at it. Now, if you see the earning per share, you can see there is a consistent growth over the earning per share of the company from $2 to 3.31, which has grown by almost 50% in last 5 years. Average is 10%. So this is how you can really make it easier for to understand. This may give the user a very easier way to understand if the price of the share is cheaper compared to the earning per share or not. Then you will see the cash dividend. So here you can see the company has been distributing almost 20 to 25% of their profits as dividends, as from earning per share into the dividend. So which is quite healthy because the company is distributing the profits and retaining 75% for the company's further growths. Which you can see as well here. For the total assets of the company has been growing, not that too much, but it's similar level. The cash reserves of the company is dropping, but is still at a very healthy level compared to the total assets. From the investors perspective, usually the cash is not generating that much of high returns. So where you have $191 billion out of 320, which is more than 50% of your total balance sheet is lying into the cash. This may be lying due to the company want to keep the cash reserve to be able to buy out the companies, to be able to do the deals which requires cash, and giving them a bargaining power so that they can buy the technologies and be getting a competitive edge against the competitors. You have to read that what is the intention from the management if that is given there. So for that we need to look at the management discussion and analysis. So the next section which you will see here is management discussion and analysis on the financial condition. So the first thing is the management is always giving is the fiscal year highlights to explain how this year the company has explained what is the COVID-19 impact on the business, and then it is giving the financial fiscal year highlights. Normal years you will not have COVID-19, but maybe if there is any significant extraordinary impact which is beyond the company's control and which has impacted the financial performance of the company, that will be mentioned in this section. So here you can see the management has just explained simply that the total sales has increased by 6% compared to 2019, and then the is coming because of the services and wearables, home accessories. The weakness in foreign currency has unfavorably impacted net sales, which you have to also consider in mind, because the Apple is selling usually to the overseas markets, not in domestic market only. So if the currency is weakening or getting foreign currencies are weakening, then their sales are going to be impacted in terms of dollars. Let's say the Indian currency is weakening, then in terms of dollar, the price in the Indian currency is not changing, but the dollar is keep on getting expensive. So when you translate them into dollars, the sales is dropping. But so we need to look at both the total number of quantity the company is able to sell, and also the value. So you cannot just only see the net sales. Now you can, because otherwise you will be getting a wrong impression on the company's growth. Then you have the in 2020 company announced increase in the central current share repurchase agreement from authorization from 175 to 225 billion dollars, raising it quarterly dividends, and the company has repurchased 72 billion dollars. This is purely due to the high cash reserves that the company is sitting on. If the companies normally are not able to use the cash for the businesses, it's healthier for the companies to distribute it back to the shareholders so that they get some return, and that in return help to increase the company's overall valuation as well. Then you have the products and sales information. Here you can see what is the net sale by category, right? So iPhone, how much is it? Is about is it dropping or increasing? So you can see the last 3 years iPhone's sale has been consistently dropping from 164 to 242 and 237. This information you will not be able to understand by looking at the net revenue only. So in order to get a deeper understanding of the company's performance, you need to look at these net sales by category. So I call it segmentation. The segmentation can be by product, by services, by geography, by customers. So it can be multiple segmentations. So here the company has given a segmentation by sales. So you can by product. So you can see iPhone is particularly dropping every year. The Mac is stagnant from 25 to 25 to 28B. iPad is increasing consistently from 18B to 21B to 23B. Then wearables are also growing consistently, quite healthily, 41% growth and 25% growth. Services are also consistently growing from 6 to 16% each year. So it's really with iPhone is the one which is dropping the sales of the company, which is impacting the overall growth. And you have considered it while reading the market risk that the company is facing intense competition in terms of product, in terms of prices, in terms of copyrights. So those are all things. So here you definitely can say, no, the company should be maybe focusing on services and maybe focusing on the iPad and wearables, which the company is doing. So you can see the growth in terms of overall percentage to the total revenue is also growing. You can copy this data into Excel, and then you can do a bit of more analysis to understand how much is the revenue in terms of how much is the percentage of revenue to the total, so that you can get a better understanding. Then you will see this is just only the commentary, how much is, what is the by the product, what is the, which model has been helping to drop or increase the sales. Then you will have a segmentation based on the location, based on the region. So here again you can see in which market the company is growing. So you can see here Americas is growing consistently 4%, 7%. However, Europe is has dropped in 1 year and then increase in second year. China has been dropping consistently, which is can be a concern because China is one of the biggest market in the world with a lot of populations. Japan is again again another area where the growth is very minimal or there's no growth at all. And the rest of Asia Pacific, which is a very small market. So the company is not, the Apple's market share in the other markets like Indonesia, India, which are again more very populous countries, but the market share of the company is very negligible. So in the, then definitely you can say that the company can find its next opportunities in these locations, in these markets. America is still growing because of the other products and the services that they are doing. You can ask the company or you can make a research by geography plus merging the product, right? So this information is not readily available. So you may have to do a bit of extra research if you really want to get that data. Then you have a gross margin. The company is explaining what is their gross margin. As you can see, the gross margin on the products is dropping. It signifies that the company is having a real pricing pressure and the cost pressure. The cost is increasing, but the price are not increasing in the same way. So that's dropping the gross profit margin for the products. But the services margin has continuously been increasing because services usually are low cost thing. So the company maybe should be focusing more on the services side, so that the product profitability, overall profitability is still remain the same, but in a contribution the services are taking over slowly the products, iCloud and other things. Then the company is explaining about the operating expenses. So year on year growth on the R&D is why the company's R&D is increasing from 14 million to 16 million to 18 millions, which is as a percentage total sales is also increasing 5, 6 and 7%. So you can read here what is driven by increase in the headcount related expenses. The company continues to believe focus on the investment in R&D is crucial. So means the company is hiring more and more engineers, developers to continue do the R&D for products and services. Because if they are not increasing the R&D in products and in also in services, as you can see already, company is quite vulnerable on the product side, where the product sale is either not increasing or not that increasing that significantly. Especially their flagship product, which is iPhone, is on decline. So the company need more services, more innovative products, and that's how the company is also trying to find the growth in research and development. Then the selling expenses are also increasing as a percentage to sales, also is related to the headcount related expenses, higher spending in the higher variable selling expenses, then the other operating expenses are also increasing in the department, so which is agreeable given the pricing pressures. Now you will see the other information about the interest and dividend is not that significant for the companies because it's a very low revenue for that. Then the taxes impact also is shown here. The company's effective tax rate is dropping from 18 to 15 to 14%, means the company is able to take the benefit of the tax incentives that the government is offering. Overall statutory federal tax rate has dropped as well, contributing to the savings. That's how we read the report. Now the next section on the recent accounting pronunciations is not really very important for analysis point of view. Then you have the liquidity and cash reserve, which is, we have seen that cash is very much healthier for the company. So you don't have to, you can read this while you are analyzing the company's liquidity ratios and other ratios, so that you can understand them better. Accounting policy revenue recognition is not really important for understanding the financial statement, so we're gonna be skipping this. The next section which we have to really do is the financial statements, which we are going to do in the next video.